Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions Market Insider TV. This is our opening commentary on Tuesday morning, May the 6th. Hope your day is off to a great start. Beautiful sunshine here in Springfield. Going to be a wonderful day. In fact, this week and weekend going to be very nice. Chances of rain Wednesday, but other than that, a lot of sunshine and nice moderate temperatures, kind of low humidity, just perfect weather here in the Ozarks. Hope your morning is off to a great start. Weather is looking beneficial in your area, and we'll talk about weather and how it's impacting our corn and soybean crops here in just a second. First, let's get into overnight markets. Dollar is a little bit weaker here this morning. Natural gas softer as well. But look at crude oil bouncing. Big drop yesterday. We were talking yesterday morning. We were $2 losses after a gap lower opening. We're seeing 2.5% gains in the crude oil overnight. Stock market down, but look at gold. These two markets acting opposite of in a lot of ways. As a stock market had rallied up above 5,700, gold dropped to below 3,300, but that proved to be a buying opportunity for gold, selling opportunity for the stock market, as gold has rallied sharply with the stock market being down. This is going to be, I think, a type of trade where if the stock market rallies, people will pull money out of gold, put it into the stock market, and vice versa. And we're seeing drop in the stock market, money flowing back into gold and silver. Silver's up 83 cents this morning. July corn, after getting beaten yesterday, up 2.5 cents technical recovery. Beans down about 2 3/4. November down 4.5. And oats up 3. Wheat is 3 to 5 cents better in our overnight markets. So let's talk about these overnight markets here, as there's a lot of things to focus on. I want to make sure that you follow us on Twitter, as well as go to our website. You can sign up for a free trial to our daily newsletters, our trade recommendations, our hedging ideas, all in our closing commentary that's restricted. You have to sign up at our website to receive that in your email box. So go ahead and do that if you haven't already. And our website address again, MidwestMarketSolutions.com. Okay, 6-10 day outlook calls for warmer, drier conditions across Corn Belt. That suggests corn seeding as well as soybean seeding will be aggressive over the next 10 days. We're going to see a lot of sunshine, a lot of crop being put in the ground after some rains. A lot of producers telling us how great the soil moisture profile is right now, how soft the ground is, how it's working in nearly perfectly. So I think we're off to a really good start here. We'll talk about the pace here just a second, but not a super aggressive pace, but pretty much a normal type pace. In fact, corn plantings announced yesterday afternoon, 40% complete. Trade was 41, so no changes there. Last week 24. A year ago we were 35. And 39% on average. So we're ahead of the average and ahead of last year, just barely. Emergence, 11% nationwide, 9% on average. Soybean seeding's also moving pretty aggressively here. 30% complete versus 31 expected, 18% last week. 24 is the last year's pace, and the average is 23. So we're way ahead of last year and the average pace with emergence at 7%. So corn and soybean seeding's above the normal pace. I think the trade focus will be, until proven wrong, we're going to have at least an average, if not better than average crop. That means trendline yields or better because of this fast seeding pace that we have in place. Winter wheat conditions improved 2% to 51, good to excellent. That's above last year's 50% of the crop rating. 39% is head stage. Spring wheat plantings, 44% complete. That is right in line with last year and way ahead of the average. So again, another crop that's being put in faster than average. Oats, 71% complete as far as plantings go, way ahead of the average. A lot of these small grains going in the ground very quickly across the Midwest and upper Midwest. So no issues as far as weather goes, and could and should put some pressure against our new crop corn and soybean values. Yesterday we had weekly export inspections come out, and I want to talk about this because we have a supply and demand report out a week from yesterday on the 12th. And corn inspection, 63.3 million bushels. I really think USDA is going to tighten balance sheets in the corn market once again. Maybe they tighten soybean ending stocks, but they're more likely to leave that alone. They were at 11.9 million bushels and wheat 11.4. Corn exports have been running a very rapid pace, and USDA is not keeping up with their forecasts. They do need to tighten it, maybe 25 million. If they want to be aggressive, they'll tighten it 50 million bushels. As far as ending stocks go, as they increase the export forecast by a similar amount. But again, that'd be 50 million, I think, would be aggressive for the USDA, most likely. it will be 25 million. And I'm surprised that the old crop corn has sold off like it has with this export profile that we have. Finally, this week's Cattle Facts show list, it's only 200 head larger than last week at 227,000 head. Cash calls are steady to higher again. Futures are up over $2.50 yesterday, anticipating stronger cash trade this week. Look for stronger cash trade develop in the Southern Plains again this week as numbers remain tight. There's just not enough cattle out there to meet the demand that we have. All right, I'm going to sign off and wish you a wonderful day of trade. Good luck, and as always, reach out to us. Be glad to talk markets with you. This has been Brian Hoops from Midwest Market Solutions. Good luck, good trading, and we'll talk to you soon.